Good morning, my name is Summer Lily Harris. Thank you for taking the time to sit down and consider loaning and investing in my future company. I am looking to open up a bakery on the Sunshine Coast. I have done a considerable amount of planning, research and envisioning as to how I believe the business will run, and I think it will be a great success. Before starting up your own business, there are many things that you should take into consideration. These things vary depending on what your business is and what your company does. For example, if I were looking to start up a bakery, I would need to create a business plan, consider whether I have baking qualifications or am an amazing baker or know bakers that I would like to employ. Find a location for my bakery, look at and in the area I would like to be in and find out if it is a high, moderate or low demand area for a bakery, and how many bakeries are already in the area. Do I want to buy or lease shop or space? Think about my financial support and future. Do I currently have the money to open the shop on my own, or do I need to look at getting a loan from an investor or having a business partner? Find an accountant and speak with them about my plans. I need to think logically about supplies. Until the food can start paying for itself, do I have the funds to be constantly restocking ingredients, and where will I get these ingredients from? I would need to design a logo, get an MBA and register my business name. I would also need to think about marketing and what marketing I would need to do. I would then need to consider all the policies and procedures that my business would need to meet the Australian food and workplace standards, and seek to obtain legal advice. After considering all these things, I need to be sure that this is something I can and want to do. If I am unsure, I should seek advice from my family, friends, or an accountant. When opening a business, it is very important to be forward-thinking and think about overheads and extra costs that may come with the business. Overheads are running costs, maintenance costs, etc. Overheads can come in different forms of things like rent, electricity, and water bills, new equipment, premises, and maintenance. Fixed costs are costs that do not change depending on increase or decrease of production and sales, whereas variable costs are costs that can vary with the level of production and sales. A few examples of fixed costs are things like rent, insurance, and machinery. No matter how many sales you did or didn't make that week or that month, these are costs that still have to be regularly paid and don't change. Hence, they are fixed. Variable costs are costs that depend on production and sales. For instance, the variable cost for my bakery would be my ingredients, like flour, eggs, milk, yeast, etc. These are costs that depend on how much I buy, where I buy it, and if I buy it. So they can largely vary, hence variable costs. It is easy to avoid spending too much money by keeping a spreadsheet of your incomes and outgoings over a 12 to 6 month period. After 6 to 12 months, you should sit down and go over the spreadsheet, re-evaluating your outgoings and eliminate any unnecessary costs. Find cheap and trustworthy suppliers and employ staff on a part-time or casual basis. Carefully check all invoices and outgoing payments in case there has been confusion and you have been overcharged. Make the most of your premises and, if possible, sublet space. Before a company can earn a profit, it must generate enough income to cover startup costs, variable costs, and fixed costs. This is called the break-even point. The quicker the break-even point is achieved, the sooner the company can earn a profit as all its expenses are being covered. A break-even analysis is displayed on a table that calculates a break-even point that is based on fixed costs, variable costs, and income per unit of sales. A break-even analysis is important as it provides valuable information for long-term planning and goal setting, which can help you to run and operate your company better in the future. The break-even analysis data is often used to help small businesses have a bit of foresight, helping them to determine the sales income needed to pay ongoing business expenses, allowing financial projection. There are several different types of pricing, one of which is the going rate pricing. This is when businesses or companies set a price on a service or product using market price as a basis. Whatever their competitors are selling it for, they sell it for the same or less. The second type of pricing is target profit pricing, which is when a company sets a price determined by the amount of profit they need to make. For my bakery, I think a mix of both methods will work best, as I need to keep my prices down to keep up with other bakeries in the surrounding area, as well as meet my target profit. If it costs me $1.50 to produce one loaf of bread, tax, machinery and labour included, in order to meet my break-even point, make a profit and stay competitive, I could sell one loaf of bread for $3.50. By doing this, I am achieving all the things that need to be achieved to keep my business running well. Goods and Services Tax, or GST, is an added 10% on most goods and services, which is paid by consumers. To find the amount of GST that was added to the price, you can multiply the full price, GST included, by 11. Then divide the result by 23, and that will give you the GST amount. To work out the price of the service or product without GST, divide the amount by 1.1. For example, if I had $220, I'd divide that by 1.1 and it would equal $200 without GST. Another way that you can find the amount of GST is to find an online GST calculator. A business activity statement, also known as BAS, is a form of reporting and paying GST that is submitted to the Australian Taxation Office, or ATO, by all companies and businesses to report their taxation obligations on a monthly or quarterly basis. It is important that all companies and businesses record the amount of GST they have collected, how much their business has earned, and how many GST credits they are wishing to claim. When lodging your business activity statement, the business should keep tax invoices for any purchases they wish to claim GST credits from. When I start my small business, another cost I will have to bear in mind is labour costs. Depending on someone's age and ability, their hourly rate will differ. Across Australia, there is a set minimum rate. An employer is allowed to pay employees over the minimum rate, but it is illegal for the employer to pay under the set minimum rate. The national minimum wage for a qualified adult is currently $17.50 per hour, or $672.70 per 38-hour week. However, there are special national minimum wages for trainees, apprentices, and juniors. Minimum wages can differ depending on a person under the age of 21 as well. For example, a person under the age of 16's minimum hourly rate is $7.98. The minimum hourly rate jumps up a rough $2 each year until the person reaches the age of 21. Then the standard minimum hourly rate applies. Each fortnight I pay my employees $986, which means they earn $493 per week, which works out to be 70 cents per hour. This is $17 under the legal requirement for an adult, and at least $7.28 under a person for a person under 21. Instead, I should be paying my adult employees at least $35.40 per hour, which is $2,478 per fortnight, and at least $555.60 a fortnight to my employees under the age of 21. A comparison calculator is a good tool for me to use to determine how much money I may need, how much the loan is going to cost me, and what the best loan for me is going to be. It allows me to give two hypothetical loan prices to compare. I roughly calculated that to initially start my bakery, I will need a loan of $150,000 to be able to buy shop space, get it fitted out to meet Australian government requirements, as well as purchase the first 3 months of supplies and pay for insurance. To be able to buy shop space, get it fitted out to meet Australian government requirements, as well as purchase the first 3 months of supplies and pay for insurance. In my comparison calculator, I put in 2 different hypothetical loans to see which might be better for me. The first one was a loan of $150,000 over 5 years on a Flexi First investment loan. The interest rate was 4.91% per year, with a monthly repayment of $2,825. The total interest was $19,459, which means this loan will cost me $169,459. The second was a loan of $200,000 over 7 years on the Rocket investment loan, with an interest rate of 5.56%, with a $2,880 a month payment and a total interest cost of $41,884, which means this loan will cost me $241,884. I will ensure that if you choose to invest in my bakery, you will receive a good return, as all my monthly payments will be made on time and to the correct amount. As I plan to open my bakery in Stockland's new estate, I predict that I will have a steady income in order to be able to pay off the loan in a timely fashion. I'll stick to my business plan, doing my best to ensure that the business runs as planned. Once I have successfully paid off my loan, I will continue to do all my business banking through your bank, being a loyal customer to your business.